Greetings. This is the income tax online class for medical expenses, and I am Donna Byrne at William Mitchell College of Law. At the end of this module, you should know that Section 213 is the deduction for medical expenses. You should be able to identify medical expenses. You should know where to find that authority in the Internal Revenue Code. You should be able to apply the applicable limitations, in other words, the 10% floor, and you should understand well the concept of a floor. Okay, let's have fun with this. Section 213 provides, there shall be allowed as a deduction the expenses paid during the taxable year not compensated for by insurance or otherwise for medical care of the taxpayer, his spouse, or a dependent, to the extent that such expenses exceed 10% of adjusted gross income. Let's break that down a little bit. There are some key pieces here. There shall be allowed as a deduction the expenses paid during the taxable year not compensated for by insurance, for medical care of taxpayer, spouse, or a dependent, to the extent that the expenses exceed 10% of adjusted gross income. All right, so those not compensated expenses are only the out-of-pocket expenses. And keep in mind, the code says not compensated for by insurance or otherwise. So this would also apply to employer-provided cafeteria plan reimbursements. Okay, for medical care, that's the biggie. What counts as medical care? In Ferris versus Commissioner, this is in your casebook, Bonnie Ferris had a back condition, so her doctor told her she should swim twice a day. Now that would be inconvenient, having to go to a gym or go to a pool. So Collins and Bonnie Ferris built onto their house at the cost of about $200,000 a swimming pool addition. It was nice. It was designed by an architect. It fit in with their beautiful home. It used the same kinds of high quality materials. And it even included some additional recreational and entertainment features. I'm not sure what those were, but they were spendy. So the total cost was $194,600. I picture something like this, maybe with built-in speakers, perhaps a large TV screen, I don't know. But without the entertainment features, it cost $172,000. So some $22,000 worth of entertainment features, whatever those were. Anyway, here's a rule. Capital expenditures for medical reasons are deductible all at once to the extent that they do not add value to the property. All at once. This is different from trade or business capital expenditures. Usually we add a capital expenditure to basis and then we deduct it over time. But for medical expenditures, all at once in the year that you pay it. So the Ferrises deducted $86,000 out of the $172,000. They thought that the rest actually added value to their home, so under the rule that wouldn't be deductible. Now, the IRS added it up a little differently, big surprise. They said the pool itself only cost $13,074. Now, the cost of a pool was medically necessary, but the cost of the building was not. So in other words, pool, yes, building, not medically necessary. Really? In Wisconsin? These people were from Wisconsin. Okay, so maybe a building is medically necessary. It needed to be an indoor pool in Wisconsin. If she's going to use it twice a day year-round, yeah. But it didn't need to be so nice. It didn't need to be upscale. Maybe something more like this greenhouse. So what have we got so far? The cost of a swimming pool can be deductible as a medical expense. The cost of the addition to make it an indoor pool can be a medical expense, and that whole capital expenditure is deductible all at once, only to the extent, though, that it does not add value to the house. Now, with pools, don't go getting too excited, because some people consider pools to reduce the value of the house. People with small children, for example, might not buy a house with a pool, no matter how nice it is. So, next question, how much of this expense is medically necessary? Okay, well, this is from the regulations. A capital expenditure made by the taxpayer may qualify as a medical expense if it has as its primary purpose the medical care of the taxpayer, spouse, or dependent. So, did this substantial additional expense attributable to architectural and aesthetic compatibility have the primary purpose of medical care for Mrs. Ferris? The court says the additional luxury costs are not expenses for medical care because they are not directly related to medical care. Now, really? The additional luxury costs aren't related to medical care. Does that mean you have to choose the cheapest medical care or always use generic prescriptions? No, it doesn't. It just means that the expense itself has to be directly related to medical care. So when you buy prescriptions, the prescription is medicine, one way or another, whether it's the cheap version or the expensive version. Same thing with the doctor, right? If you could get the same treatment at a cheap clinic and an expensive clinic, you're not obligated to go to the cheap clinic. And if you're buying insurance on the exchange, you're not obligated to buy the cheapest insurance, right? But it has to be medical. It has to be medical. Okay, so that's what we've got from Ferris, right? The medically necessary component, even of a swimming pool addition, is a medical expense. This is a picture of Major General Collins Ferris. I couldn't find a picture of Bonnie Ferris. And we'll stop here and then move on to part 2. Thanks for watching.